Hello investors, welcome back to a new Vinley Weekly Radar. This week we're going to be speaking about 5 companies: SpaceX, Palantir, AMD, Ralph Lauren and Airbnb. So those 5 companies have been publishing their earnings over the last couple of days, and I want to give you an overview on what actually happened, how the market reacted to those 5 companies. As you can already see in the title is that, those 5 companies had very solid results, but the markets reacted differently. That's why I wrote this as a summary. Everyone beat, not everyone won this week on the market. Let me start with AMD. So kind of the competitor to Intel, less to Nvidia, because they mostly rely on CPUs and not GPUs. They do have that lineup as well. Financials were pretty solid. So compared to the last year for the same quarter, like 50% year-over-year growth. So they have been beating estimates. You know that I'm not the biggest fan of looking at Wall Street estimates. Data center revenue was up. So also there, they have a positive impact of AI. And more specifically, if you look at the type of product they sell, AI agent-related CPUs. So there, the revenue of data center was up 107% year-over-year. And despite that, the market reacted negatively. So as you can see also on the curve that I extracted from Vinley, you see that the stock rough cut lost 10%. And one of the reasons why the market reacted negatively is a comment from Elon Musk. You know that Elon Musk, and we'll speak about SpaceX in a second, that Elon Musk runs inside of SpaceX the xAI company with Grok, which is one of the large language models, competitor to Anthropic, Claude, and ChatGPT, amongst others. And in May this year, Elon Musk said they would continue buying AMD and Nvidia chips, but actually this week he mentioned that he would no longer commit buying AMD chips. That's the main reason why the market reacted negatively to the, let's say, the outlook and the forecast of AMD moving forward because of Elon Musk's comments. The SpaceX, speaking exactly about SpaceX, so it was actually the first time since their IPO that SpaceX has been reporting their earnings. So the revenue was up 92% year over year, which is very decent. The loss, so there's of course now for the time being not profitable. And remember, SpaceX is not just space exploration; it includes xAI as well, in fact, so the AI division of Elon Musk. And so the loss has kind of been divided by 2, from 1 billion a year ago of net loss now to rough cut 540 million US dollars. What is pretty funny, and you see it in the graph, that initially the market, after the results were released, the market reacted pretty positively, plus 10%. And then after hours, it went down by minus 8%. And you see now, we are Friday the 7th, that the stock took back again, and it has again increased by a rough cut 10%. It's true that macroeconomic events are pretty favorable this week, the last 2 days specifically, so that can also have a small effect on market prices, as you know. Nonetheless, where markets reacted negatively is because of the capex ban. You remember that's an ongoing conversation nearly every week, if it is the Microsofts, the Meta platforms, the Googles, the Amazons. So there is a big conversation going on the capex, so the investments going on into data centers and to AI-related chips to build up capacity. And so the capex hit actually $18 billion this quarter, which is a huge cash outflow. And nearly 90% of that, I think was 86% what I wrote here on the slide, 86% in fact went into the AI division, so xAI and Grok. Why? Because it requires capacity, those large language models. So yeah, that's what you have to keep in mind. So first time, I said, after the IPO, that's something that you have to consider. What is interesting nonetheless, and I added here, I found this graph on from a guy called Boris, sorry, I don't remember now his last name, where he was kind of drafting what is the unlock timeline for the shares of SpaceX, because something that investors, maybe some of you are not aware of, is that currently at IPO only rough cut 5% of the shares of SpaceX have been released as free float, right? All the rest is sitting with employees and with Elon Musk as well. So here you see the timeline over the next couple of months and years. So around summer next year, there's going to be rough cut 50% of the shares of Elon Musk that could potentially be sold by Elon Musk, right? So, and the risk is what people are considering is like, okay, what is the likelihood that Elon Musk or even other employees, you see that there is a cascade, there's going to be an increase in supply or possible supply. It is not I would say it's not obliged that employees will start selling the shares. It's just that they could start selling the shares. So it means there's going to be more free float available on the market on SpaceX shares, which could then be considered as a negative signal. If you are an owner of a company and you are selling your shares, that's not necessarily a good signal for the company, right? So you remember that in the US, for example, you have this insider trading that has to be declared through specific SEC form. If directors get shares or they sell shares, it has to be declared, because of course it can influence the opinion of markets and also the impact on the share price of a company. So the main risk here is Elon Musk in summer 2027, when he is entitled to 46% of the shares. And then, you don't know what's going to be the reaction if Elon Musk decides to sell shares. Well, potentially this would be considered as a negative signal on SpaceX by the market, and that could potentially, of course, negatively influence the share price, in fact, of SpaceX shares. So we'll see. We do not know. As always, we do not know. But just to explain to you that you have to consider that there is this unlock timeline for the SpaceX shares. Palantir, very strong company. They are at the top. I'm going to show you a different angle on Palantir, but they have been beating revenues and having double-digit growth everywhere. And of course, the stock reacted very positively. So revenues were up like nearly, in average, around 100%. If it is on revenue overall, if it is US commercial, US government. So very, very, very strong figures. One interesting thing that I'm going to be sharing this with you, which I put here in red, is the rule of 40 with a score of 155%. You probably have never heard about this rule of 40. I will explain it in a second. They even on top of that raised the guidance for end of the year, so we'll see. But it's the 9th consecutive quarter where they are beating, in fact, their earnings. So that's, pretty strong company. And of course, with the geopolitical situation going on, of course, this is something that, of course, fuels the Palantir's business. So you see in the graph, they came down from the top. They were already at rough cut $210 a couple of months ago. But the market has reacted very positively to the last earnings of Palantir. The rule of 40, that's an interesting thing, and I took the graph out of the earnings report of Palantir. So they provide this slide, and I think it's a very interesting slide. When I saw this slide, I even thought it would be interesting that in Vinley we would create this rule of 40 visualization. So the rule of 40, if you have never heard about it, is a common SaaS software health check where basically it is expected, or let's say companies, so SaaS and software companies, are good when they reach between their revenue growth and, so it's a sum of the revenue growth and the profit margin, they reach at least 40%. That's the rule of 40. It's like a stick in the yard. A lot of people look at this kind of a benchmark. What is interesting for Palantir, they're at 155%, in fact, which is crazy, crazy high. You see here in that graph, and I would recommend you going to their report. Very interesting Q2 report where they have this graph, and you're going to see companies, and I don't know if you're going to see my mouse moving, but for example, Microsoft sits here with 66%, Google 65%, Meta 71%. You see Nvidia sitting here as well at 153, if I'm not mistaken, percent. So very interesting graph. AMD 57%, for example, Intel 42%. I would recommend you to have a look at the earnings report of Palantir. Very interesting perspective on this. Next one is Ralph Lauren. So Ralph Lauren, so a retail fashion company. Results were very strong. You can read it in the tone of the management when you read the report of this quarter. That management is very much pleased. The revenues were strong. Interesting signals is that China was up more than 40%. So that's a good signal of the economic activity in China as well, and that people like the brand Ralph Lauren. And of course, the market reacted positively. I mean, of course, Ralph Lauren is not at the top for the time being in terms of share price. You see that it dropped from rough cut 110. But the market reacted very positively, in fact, to Ralph Lauren's results. Last one is Airbnb. I mean, you see it immediately on the right-hand side in the graph that I exported from Vinley, that the market reacted extremely positively, like more than 10% on the financials of Airbnb. So, I mean, you can read the financials. I mean, I don't want to go into the details. They had double-digit growth. The profitability is very nice. Of course, they profited, amongst others, also from the FIFA World Cup. When I read the report, they were referring, they were giving a number that's apparently 150,000 listings profited in the US, Canada, and Mexico from the FIFA World Cup. And of course, that's a lot of revenue for them as well, and for the people who are renting their facilities. One of the things that I wanted to call out specifically on Airbnb, and it does not happen very often, and actually I liked what they were writing. And I mean, some of you know that I'm teaching also in business schools at university, and I tend to use, and we're trying to apply the same let's say methodology to Vinley, is what is called the customer value chain from Professor Teixeira. So Teixeira has been professor at Stanford University, has written a very interesting book called The Customer Value Chain, and I was surprised that Airbnb, I think it was in page 2 or page 3 of their latest earnings report, they were mentioning, in fact, that they had invested and paid attention a lot to the customer and host experience. So, for example, they were speaking about things like in improving the logging experience of users, the simplification of the web and the home page, amongst others. The recommendations were now better. So a lot of, and they even speak a lot of minor improvements, but if you put them together, they hope that they will compound strongly by having all those small ones that are removing friction, in fact, in the whole process, if it is the customer process or the people who are providing the listings on Airbnb. So I found it very interesting from an operation perspective what management was writing there. Again, here I don't have the time to go into the details. Again, I recommend you, and if you don't find the report, just drop me a comment in the video, and I'm happy to share the Airbnb document with you. It's very interesting to read what they were thinking about optimizing and removing friction everywhere in the customer value chain. So very interesting report, I have to say. And so yeah, that's it for this week's Vinley Radar. And I hope that you like the 5 companies that we covered this week. As always, if you like this type of format, I'll try to make it quick, but nonetheless, even though each time, of course, we will be speaking about the financials of the company, but I always try to have a different angle and decoding a little bit what is behind the numbers and not just looking at the financials. And so if you want to support the channel, feel free to subscribe, to like this video. This, of course, supports us and motivates us and the team to continue delivering this type of episodes and on a weekly rhythm. Thank you very much. Enjoy your weekend and talk to you very soon.